Based on the provided data for Bitcoin, a bullish investment strategy appears promising. The price history shows a general upward trend, with recent fluctuations around the $100, $0.000 mark. The one-week price forecast also anticipates continued growth, suggesting potential for further gains. Considering these factors, a long-term investment perspective seems appropriate. Therefore, a strategy involving a long position in Bitcoin is recommended. An entry price around $102, $0.000 aligns with the current market price and allows for potential upside as the forecast suggests prices may reach $103, $0.000. A stop-loss order placed at $101, $0.000 would protect against unexpected price drops. A target price of $104, $0.000 capitalizes on the predicted upward momentum and aligns with the resistance level, providing a reasonable profit margin. Based on the provided price information for Bitcoin Cash, a cautious investment strategy is recommended. The 2-week price history reveals a fluctuating trend, with both upward and downward movements. While the forecast suggests a potential decline in the coming week, the support price of $421.40 provides a potential floor for the asset. Considering this outlook, a long-term investment approach is more prudent than a short-term one. An entry price at $425, slightly above the support level, allows for a margin of safety while capturing potential upside if the price rebounds. The stop-loss should be set at $419, aligning with the lowest predicted price in the forecast, to minimize potential losses. The target price can be set at $450, representing a reasonable profit target based on historical price movements and the current market sentiment. Based on the provided information for stacks, a short-term bearish strategy appears to be the most suitable. The historical price data reveals a downward trend over the past 2 weeks, with the forecast further predicting a decline in price over the next week. The forecast price suggests a potential drop from the current price level to as low as $1.19, significantly below the current market value. This downward trend, coupled with the forecast, indicates a high likelihood of stacks continuing its downward momentum in the short term. Therefore, an investment strategy should focus on capitalizing on this anticipated decline. A short position would be advisable, with an entry price around $1.42, aligning with the current price and slightly above the immediate support level. The stop-loss should be set at $1.48 to mitigate potential risk if the price unexpectedly reverses course. The target price could be set at $1.25, aiming to capture a significant portion of the anticipated price decline. This strategy aims to profit from the short-term bearish trend in stacks, taking advantage of the forecast price decline and the current market conditions. Based on the provided Ethereum data, a cautious investment strategy focusing on the short term appears to be the most prudent approach. The historical price data exhibits volatility, with recent fluctuations indicating a potential downtrend. The forecast price further reinforces this notion, suggesting a continued decline in the coming week. The support price at $3,138.07 acts as a potential floor, while the resistance at $3,337.43 presents a significant hurdle for an upward move. Considering these factors, a short position on Ethereum is recommended. An entry price around $3,250, slightly above the recent price action but below the resistance level, would be suitable. The stop-loss should be placed at $3,300, above the entry price, to limit potential losses. The target price could be set at $3,100, aligning with the lower end of the forecast price range and allowing for a reasonable profit margin. This strategy aims to capitalize on the anticipated price decline while managing risk effectively. Based on the provided price history and forecast for Ripple, a medium-term investment strategy appears most suitable. The historical data shows a clear upward trend, with recent price fluctuations around the $3 level. The forecast predicts a continued upward movement, albeit with slight corrections, hovering around the $3 mark. This suggests a period of consolidation and potential growth in the medium term. Therefore, a long position is recommended for Ripple. An ideal entry price would be around $2.95, allowing you to enter near the support level while capturing potential upside. The stop loss should be set at $2.91 to minimize risk in case of a sudden downward correction. The target price could be set at $3.15, aligning with the higher end of the forecast range and providing a reasonable profit margin. This strategy allows you to capitalize on the anticipated upward momentum of Ripple while managing risk effectively. Given the price trends and forecast for Binance Coin, a cautious investment strategy would focus on a medium-term approach. The historical prices show some volatility, with the recent price action hovering around the support level of $649.89. The forecast indicates a potential decline in the coming weeks, with prices possibly dropping towards $665. However, the historical data also suggests a tendency for Binance Coin to bounce back from this support level. Therefore, a medium-term long position is advisable. An entry price around $660 would allow you to buy in at a discounted price, anticipating a potential rebound towards the resistance level of $685.69. The stop loss should be set at $649.89 to protect against a further decline below the support level. The target price could be set at $685, allowing you to capitalize on the potential upside while managing risk. This strategy aims to take advantage of the potential for a bounce back from the support level while acknowledging the short-term bearish outlook. Based on the provided data for Stellar, a medium-term investment strategy appears most suitable. The recent price history demonstrates a fluctuating trend with both upward and downward movements. The forecast suggests a slight upward movement in the coming week, with prices potentially reaching around $0.438. However, the historical data also indicates a tendency to pull back after reaching certain resistance levels. Therefore, a medium-term approach allows for capitalizing on potential price increases while mitigating the risk associated with short-term volatility. Considering the information, an entry price around $0.427 would be prudent, as it is slightly below the current price and close to the recent support level. A stop loss should be placed at $0.415 to limit potential losses in case of an unexpected price drop. The target price could be set at $0.485, which aligns with the historical resistance level and the potential upside projected by the forecast. This strategy balances risk and reward, aiming to profit from the anticipated price increase while protecting against significant losses. Based on the provided price information for Toncoin, a cautious short-term investment strategy is recommended. The 2-week price history shows volatility, with a recent decline. While the forecast predicts further decreases in the coming week, the support price at $4.819 suggests a potential floor for the price. Therefore, a short position is advisable, aiming to capitalize on the anticipated price decline. An entry price of $4.95, aligned with the first forecast price, would be suitable. A stop loss at $5.03, slightly above the entry price, would limit potential losses. The target price should be set at $4.82, slightly below the support price, allowing for a reasonable profit margin while acknowledging the possibility of price fluctuations. This strategy prioritizes risk management and aims to profit from the short-term bearish outlook for Toncoin. Given the historical price data and the 1-week forecast for Cardano, a short-term investment strategy appears to be the most promising. While the historical prices show a general upward trend, the recent forecast suggests a slight downward correction. The current price is hovering near the support level of $0.9783, indicating potential buying pressure. However, the forecast price range of $0.987 to $0.967 suggests a slight pullback before any further upward movement. Therefore, a short-term bearish strategy could be implemented. An entry price around $0.995, slightly above the current price, would allow for a small margin of safety. The stop loss should be set at $1.005, protecting against any unexpected price surge. The target price could be set at $0.965, aiming to capture a potential downside move in line with the forecast. This strategy capitalizes on the anticipated short-term correction while mitigating risk through a well-defined stop loss. Remember, this is a speculative strategy based on limited information and should be approached with caution. Based on the Litecoin price history and a provided forecast, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a general upward trend with some fluctuations, indicating potential for continued growth. However, the forecast suggests a slight dip in the short term before a potential recovery. Therefore, a long position is recommended. The entry price could be set around $110, aligning with the forecast and providing a buffer below the recent high. The stop loss should be placed at $102, slightly below the recent lows, to minimize potential losses. The target price could be set at $130, aiming for a significant price increase based on the historical resistance level and the potential for upward momentum. This strategy allows for capitalizing on the potential for growth while managing risk through a well-defined stop loss. Based on the provided price information for Doge-Coin, a short-term bearish strategy appears to be the most suitable approach. The historical price data exhibits a fluctuating trend, but the recent 2-week period shows a downward trajectory. The forecast price further reinforces this bearish outlook, suggesting continued declines in the coming week. Considering these factors, a short position is recommended. A suitable entry price would be $4.65, aligning with the projected price decline. The stop loss should be set at $4.76, slightly above the entry price, to limit potential losses if the price unexpectedly rebounds. The target price would be $4.41, slightly above the forecast's lowest point, allowing for profit taking before the price potentially finds support. This short-term strategy capitalizes on the anticipated downward movement of Doge-Coin while managing risk through a well-defined stop-loss order. Given the Aptos price trends and forecast, a cautious investment strategy would be advisable for the short to medium term. The historical price data shows a volatile period, with recent declines. The forecast indicates further potential downward movement, suggesting a bearish outlook. However, the support price at $8.38 provides a potential floor for the price. Therefore, a short position could be considered with an entry price around $8.50, aligning with the current price and above the immediate support level. The stop loss should be set at $8.73, the resistance level, to limit potential losses if the price unexpectedly surges. The target price could be set at $8.10, aiming to capitalize on the forecasted downward trend while staying above the support level. This strategy balances risk and potential reward, allowing for potential profits from the anticipated price decline while mitigating losses if the market moves against the forecast. Given the price trends and forecast for SE, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests SE could drop from its current price to as low as $0.278, while the support price sits at $0.3415 and resistance at $0.364. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve an entry price of $0.360, aligning with the resistance level. The stop loss should be set at $0.378 to protect against any unexpected price recovery. The target price should be set at $0.290, allowing you to take profits before the market hits the forecasted lower price. This strategy aims to limit potential losses while maximizing gains from the anticipated downward movement. The Ethereum Classic price history shows a relatively stable trend, hovering around $25. The forecast predicts a slight downward movement in the coming week, with prices potentially dropping to $23. Considering this forecast and the current price hovering near the support level of $24.58, a short-term bearish strategy seems appropriate. We can capitalize on this potential dip by entering a short position at the current price of around $25. To manage risk, we should set a stop loss at $25.50, slightly above the current price, to limit potential losses if the price unexpectedly rebounds. Our target price would be $24, aiming to capture the potential downside movement predicted by the forecast. This strategy allows us to take advantage of the short-term bearish outlook while minimizing risk. Based on the provided Polygon data, a short-term bearish investment strategy seems most appropriate. The 2-week price history shows a downward trend, and the forecast predicts continued declines over the next week. The price is currently hovering near the resistance level of $0.4736, suggesting a potential for a pullback. Considering this outlook, a short position on Polygon is recommended. An aggressive entry price could be around $0.465, aiming to capitalize on the downward momentum. A stop-loss order should be placed at $0.482 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.429, aligning with the lowest predicted price in the forecast. This strategy aims to profit from the anticipated decline in Polygon's price within the short term. Based on the provided information for AEVO, a short-term bearish investment strategy appears most suitable. The historical price data reveals a consistent downward trend, and the forecast price further supports this outlook, predicting continued declines over the next week. The support price sits at $0.2826, while the resistance is at $0.3069, indicating that the prevailing trend is downward. Therefore, entering a short position at the current price of $0.286 would align with the market sentiment. To manage risk effectively, a stop-loss order should be placed at $0.295, slightly above the current price, to limit potential losses in case of an unexpected upward movement. The target price for this short position could be set at $0.265, aiming to capitalize on the predicted decline. This strategy aims to profit from the anticipated downward price movement of AEVO in the short term, taking advantage of the current market conditions and the bearish forecast. Based on the provided price history and forecast for optimism, a bearish investment strategy appears most suitable. The 2-week price change indicates a downward trend, and the forecast projects further declines in the coming week. The historical price data shows a consistent downward movement, reaching as low as $1.69 in the recent past. The support price of $1.69 suggests this level may act as a floor, preventing further significant drops. However, the forecast's lowest point is $1.52, indicating a potential for a deeper decline. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An entry price of $1.73, slightly above the current price and below the resistance level of $1.731, allows for a potential profit margin. The stop loss should be set at $1.79, above the recent high and the entry price, to limit potential losses. The target price can be set at $1.69, aligning with the support level and providing a reasonable profit target. This strategy aims to profit from the bearish trend while managing risk effectively. Given the provided historical price data and the 1-week price forecast for STRK, a short-term bearish investment strategy appears to be the most prudent approach. The historical prices show a downward trend, and the forecast predicts further declines, suggesting a continuation of this bearish momentum. The support price is at $0.3346, which acts as a potential floor for the price. However, the resistance price at $0.3942 is significantly higher, indicating an uphill battle for bulls to push the price upwards. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, which is slightly above the support level. A stop-loss order should be placed at $0.3942 to limit potential losses if the price unexpectedly rallies. The target price would be set at $0.3346, aiming to capture the anticipated decline towards the support level. This strategy capitalizes on the bearish sentiment and the price forecast, aiming for a quick profit within a short time frame. Based on the provided historical price data and the one-week forecast for Solana, a medium-term investment strategy appears to be the most suitable. While the historical prices show a general upward trend, the recent price action indicates a period of consolidation. The forecast suggests a continued upward movement, but at a more moderate pace. This suggests that Solana may be entering a phase of sideways movement before potentially breaking out to new highs. Therefore, a long position is recommended for a medium-term investment horizon. An ideal entry price would be around $240, slightly below the current price and allowing for a small margin of safety. The stop loss should be set at $235, below the recent swing low, to minimize potential losses. The target price could be set at $260, aligning with the forecast and the potential for a breakout. This strategy allows for capturing potential upside while managing risk effectively. Based on the provided Jupiter price history and forecast, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a volatile trend with both upward and downward movements. While the forecast suggests a potential increase in price, the volatility indicates a need for a measured approach rather than a purely aggressive short-term strategy. Therefore, I recommend taking a long position in Jupiter with an entry price around $0.850. This price point allows for entry before a potential upward movement towards the forecast price range. A stop loss should be set at $0.772, the identified support price, to minimize potential losses if the price reverses direction. The target price can be set at $1.100, aiming to capitalize on the potential price increase towards the resistance level. This medium-term strategy allows for a balance between risk and reward, taking advantage of the anticipated price increase while managing potential downside risks. Based on the provided historical price data and the forecast for render, a short-term bearish strategy appears most suitable. The 2-week price change demonstrates a downward trend, aligning with the forecast which predicts a continued decline over the next week. The forecast suggests a potential drop from the current price to as low as $5.98, while the support price sits at $6.597. This indicates a strong likelihood of further price decreases in the short term. Therefore, a short position on render is recommended. An aggressive entry price of $6.98, close to the current price and the resistance level, allows for quick profit potential if the forecast holds true. To mitigate risk, a stop-loss order should be placed at $7.04, slightly above the entry price, to protect against any unexpected price surges. A target price of $6.597, aligning with the support level, offers a realistic profit goal before the price potentially bounces back. This strategy capitalizes on the anticipated short-term decline in render while managing risk effectively. Given the price trends and forecast for Solana name service, a short-term investment strategy appears to be the most suitable approach. The historical prices show a downward trend, with the forecast indicating further declines. The current price is hovering near the resistance level, suggesting a potential for a pullback. A short position would allow you to capitalize on this anticipated decline. An ideal entry price for this short-term strategy would be around 24 cents, aligning with the current price and the resistance level. The stop loss should be set at $0.2436, the resistance level, to protect against any unexpected upward movement. The target price could be set at $0.215, slightly above the lowest forecasted price, allowing you to take profits before the market potentially reaches significant support. Based on the provided historical price data and forecast for Doge-Coin, a short-term investment strategy appears to be the most suitable approach. The historical prices show a fluctuating trend, with recent increases followed by minor dips. The forecast suggests a slight decline in the coming week, indicating a potential short-term correction. Therefore, an aggressive short-term strategy would involve entering a short position at the current price, with a stop loss set slightly above the recent high of $0.386 to protect against unexpected upward movements. The target price would be set at $0.322, aligning with the support price and the lower end of the forecast range, aiming to capitalize on the anticipated price decline. This strategy leverages the potential for short-term price volatility while minimizing risk through a well-defined stop loss. Given the provided price information for PEPE, a cautious short-term investment strategy appears most suitable. The historical prices exhibit a volatile trend, with recent fluctuations suggesting a potential downward movement. The forecast prices further reinforce this bearish outlook, predicting a decline over the next week. The current price is near the resistance level of $0.000169, indicating a potential for a pullback. Therefore, a short position on PEPE is recommended. An entry price around $0.000168, close to the resistance level, allows for capitalizing on a potential price drop. A stop-loss order should be placed at $0.000171 to limit potential losses if the price unexpectedly rises. The target price can be set at $0.000157, aligning with the support price and providing a reasonable profit margin. This strategy aims to capitalize on the anticipated short-term decline in PEPE's price while managing risk through a well-defined stop-loss order. Given the provided price history and forecast for SHIB, a cautious investment strategy is recommended. The recent price action shows a fluctuating trend with no clear upward or downward momentum. The forecast indicates a potential decline in price over the next week, suggesting a bearish outlook in the short term. Therefore, a short position on SHIB is advisable. An entry price of $0.000218 could be considered, aligning with the current price. A stop loss should be set at $0.000228 to limit potential losses if the price unexpectedly rises. The target price should be set at $0.000194, a level below the forecasted lowest price, allowing for potential profit before the price potentially rebounds. This strategy aims to capitalize on the anticipated short-term price decline while managing risk effectively. Based on the provided dog with hat price information, the historical price data reveals a downward trend over the past 2 weeks. The forecast further predicts a continued decline in price over the next week, reaching as low as $1. Considering this bearish outlook, a short position appears to be the most suitable strategy for capitalizing on the anticipated price decrease. To execute this strategy, an entry price of $1.50 would be appropriate, aligning with the current price and allowing for some room for potential price fluctuation before entering the short position. A stop loss should be set at $1.60 to protect against any unexpected upward price movement. The target price for this short position should be $1.10, aiming to capture a significant portion of the anticipated price decline. This strategy prioritizes capital preservation by minimizing potential losses while maximizing potential gains from the predicted downtrend in dog with hat. Doge-Coin has shown a fluctuating price trend in the past 2 weeks. While the forecast suggests a downward trajectory in the coming week, the current price is hovering near its support level. This indicates a potential for a short-term bounce before further decline. Considering this scenario, an investment strategy focused on a short-term approach with a short position appears suitable. A conservative entry price for a short position could be around $0.005787, slightly above the current price and near the resistance level. This allows for a small margin of safety while still capturing potential downward movement. The stop loss should be placed at $0.00631, slightly above the recent highs, to limit potential losses if the price unexpectedly rises. The target price could be set at $0.005206, aligning with the support level, aiming to capture a significant portion of the anticipated decline. This strategy allows for a relatively high risk-reward ratio while capitalizing on the short-term bearish outlook for Doge-Coin. Based on the provided price data for NEAR protocol, a cautious investment strategy suggests a short-term approach. The 2-week price change shows a slight downward trend, and the forecast indicates further declines in the coming week. While the support price is relatively close, at $4.754, the resistance is significantly higher at $5.448. This suggests limited upside potential in the near term. Therefore, a short position on near protocol is recommended for a short-term investment perspective. An entry price of $5.10 would allow you to enter the market near the current price while leaving room for potential price decline. The stop loss should be set at $5.25 to limit potential losses if the price unexpectedly moves upwards. The target price could be set at $4.80, aiming to capitalize on the predicted price decline. This strategy aims to profit from the anticipated short-term price drop while managing risk through a well-defined stop loss. Given the price trends and forecast for Internet Computer, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and near the support level of $9.79. The resistance is at $11.791, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For this strategy, an entry price of $10 would be ideal, aligning with the current price and the downward trend. The stop loss should be set at $10.20 to protect against any unexpected price recovery. The target price should be set at $9.60, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $9.79. This approach allows you to participate in the potential price decline while managing risk effectively. Based on the provided information for Injective, the 2-week price change suggests a period of consolidation with some minor fluctuations. The forecast indicates a potential downward trend in the coming week, with prices likely to hover around the $20 mark. Given this outlook, a short-term bearish strategy appears most suitable. An aggressive short-term investment strategy would involve entering a short position at the current price of $21, with a stop loss placed at $21.50 to minimize potential losses. The target price for this trade could be set at $19.50, aiming to capitalize on the anticipated price decline. This strategy capitalizes on the bearish forecast while mitigating risk through a well-defined stop-loss order. Based on the provided data for BTC, a cautious medium-term investment strategy appears most suitable. The 2-week price change reveals a downward trend, with the forecast indicating further declines. While the support price at $326.90 provides a potential floor, the resistance at $467.30 suggests limited upside potential in the near term. Therefore, a short position is recommended to capitalize on the anticipated price decline. An entry price of $430, aligned with recent price action, would be appropriate. The stop loss should be set at $450, safeguarding against unexpected price surges. The target price, aiming for a conservative profit, is set at $350, considering the forecast and potential support levels. This strategy allows for participation in the anticipated downward movement while mitigating risk through a well-defined stop loss. Based on the provided price history and forecast for THETA network, a cautious short-term investment strategy is recommended. The 2-week price change demonstrates a slight upward trend, but the forecast suggests a decline over the next week. The historical price data shows a range-bound movement with several fluctuations, indicating potential volatility. The support price at $1.965 and resistance price at $2.059 suggest a tight trading range in the near term. Given this context, a short position with a conservative approach is advisable. An entry price of $2.03, slightly above the support price, allows for some room for price movement before entering the short position. The stop loss should be set at $2.07, protecting against potential upward price surprises. The target price should be set at $1.95, aiming to capitalize on the anticipated decline in price. This strategy allows for potential profit from the predicted price drop while minimizing risk through a well-defined stop loss. Based on the provided data for WorldCoin, a short-term bearish investment strategy appears most suitable. The 2-week price history reveals a downward trend, with the forecast projecting further declines. The historical prices indicate a potential support level at $1.866 and resistance at $1.968. This suggests that the asset might continue to fall towards the support level, making a short position potentially profitable. To execute this strategy, an entry price of $1.95 could be considered, slightly above the current price and below the resistance level. A stop-loss order should be placed at $2.05 to limit potential losses if the price unexpectedly rises. The target price could be set at $1.80, aiming to capture a significant portion of the anticipated decline. This strategy capitalizes on the current bearish momentum and aims to profit from the potential further decrease in WorldCoin's price in the short term. Given the provided price history and forecast for Hooked Protocol, a cautious investment strategy is recommended. The price history reveals a clear downward trend, with the forecast predicting further declines. The absence of support and resistance levels further suggests a lack of immediate bullish momentum. Therefore, a short position appears to be the most prudent approach to capitalize on the anticipated price decrease. To implement this strategy, an entry price of $0.326 could be considered, aligning with the current price and the downward trend. The stop loss should be set at 36 cents, slightly above the recent price peaks to mitigate risk. The target price could be set at $0.268, reflecting the lowest predicted price in the forecast, allowing for potential profit taking before the market potentially reaches significant support. This strategy prioritizes risk management and aims to profit from the anticipated short-term decline in Hooked Protocol's price. Based on the provided price information for Artificial Superintelligence Alliance, a short-term investment strategy appears to be the most suitable. The historical price data reveals a downward trend, and the forecast further predicts a continued decline. The support price sits at $1.159, while the resistance is at $1.245. This suggests that the price is likely to move downwards in the near term. Therefore, an aggressive short-term strategy would involve opening a short position at the current price of $1.19. A stop-loss order should be placed at $1.245 to limit potential losses if the price unexpectedly rises. The target price for this short position would be $1.159, aiming to capitalize on the predicted price drop to the support level. This strategy leverages the bearish outlook for Artificial Superintelligence Alliance and aims to generate profits from the anticipated decline in price within a short time frame. Polkadot's price history shows a downward trend in the past 2 weeks, with the forecast predicting further declines. This bearish outlook, coupled with the price being near its support level of $6.165, suggests a short-term opportunity to capitalize on the potential for a price drop. Therefore, an investment strategy for Polkadot would involve taking a short position. An aggressive short-term investment strategy could involve entering a short position at $6.39, the current price, with a stop loss at $6.405, slightly above the current price, to minimize potential losses. The target price could be set at $6.165, the support level, aiming to capture a portion of the anticipated price decline. This strategy aims to profit from the predicted short-term downtrend in Polkadot, while managing risk through a defined stop loss. Given the price trends and forecast for Filecoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $4.93. The forecast predicts further declines, suggesting Filecoin could drop to $4.52. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $5 aligns with the current price and the forecast, providing a buffer against immediate price fluctuations. The stop loss should be set at $5.12 to protect against any unexpected price recovery. The target price should be set at $4.75, allowing you to take profits before the market hits the forecasted low. This strategy aims to minimize risk while maximizing potential returns in the short term. Given the price trends and forecast for conflux, a cautious investment strategy would focus on a short-term approach to mitigate potential losses. The historical prices show a fluctuating trend with a slight downward bias, while the forecast suggests further declines in the coming week. The price is currently hovering near the support level of $0.148, indicating a potential for further downside movement. Therefore, a short position is advisable to capitalize on the anticipated price decline. An aggressive short-term investment strategy could involve an entry price around $0.155, aligning with the recent price action. The stop loss should be set at 16 cents to protect against unexpected upward price movements. The target price could be set at $0.135, which aligns with the lower end of the forecast range and allows for potential profit taking before the price reaches the support level. This strategy acknowledges the risk associated with short selling, but aims to capitalize on the bearish outlook for conflux in the short term. Based on the Ethereum name service price information, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend with recent price dips, indicating potential for further decline. The forecast also suggests a downward trajectory, with prices potentially falling below the current levels. Therefore, an aggressive short-term investment strategy would involve taking a short position on Ethereum name service. A suitable entry price would be around $33.50, aligning with the recent price fluctuations and providing room for price decline. The stop loss should be set at $34.50 to limit potential losses if the price unexpectedly moves upwards. The target price could be set at $30.50, anticipating a moderate decline based on the forecast. This strategy aims to capitalize on the anticipated downward movement in Ethereum name service's price within a short time frame. Given the provided price history and forecast for Avalanche, a cautious investment strategy with a medium-term perspective appears most suitable. The 2-week price change suggests a period of consolidation, with the price fluctuating around $36. While the forecast indicates a continued downward trend over the next week, reaching a low of $31, the support price of $35.19 offers a potential floor for the asset. This suggests a potential buying opportunity. Therefore, an investment strategy involving a long position in Avalanche is recommended. The entry price should be set at $35.50, slightly above the support level, to account for potential volatility. The stop loss should be placed at $34.50 to limit potential losses if the price falls further. The target price can be set at $40, aiming to capitalize on a potential rebound towards the resistance level. This strategy allows for a balanced approach, aiming for moderate gains over a medium-term horizon while mitigating potential risks. The current price trend for Bitcoin shows a slight decline over the past 2 weeks, with the forecast indicating further downward movement in the coming week. The historical prices suggest a potential support level around $0.04302, while the resistance level sits at $0.05304. Considering the bearish outlook and the forecast, a short-term investment strategy focusing on a short position seems more appropriate. An entry price of $0.0462, near the recent high, would allow us to capitalize on a potential price decline. The stop loss should be placed at $0.0489, slightly above the recent high, to minimize potential losses. The target price could be set at $0.04302, aligning with the identified support level. This strategy aims to take advantage of the anticipated price drop while managing risk effectively. Based on the provided price information for PENDLE, a cautious investment strategy leaning towards the short term is recommended. The historical price data reveals a fluctuating trend with recent dips. The forecast suggests a continued downward movement, reaching as low as $3.11 in the coming weeks. While the support price sits at $3.714, the current price is closer to the forecast lows and resistance level of $3.965. Given these factors, a short position on PENDLE appears to be the most prudent approach. An entry price of $3.85, close to the current price, would allow for quick entry into the trade. A stop loss should be set at $3.965, the resistance level, to minimize potential losses if the price unexpectedly rebounds. The target price should be set at $3.53, slightly above the forecasted lowest price, allowing for profit-taking before the market potentially finds support. This strategy capitalizes on the bearish sentiment indicated by the price trends and forecast while mitigating risk through a well-defined stop loss. Based on the provided data for the sandbox, the historical price shows a fluctuating trend with recent downward movement. The forecast price suggests further decline over the next week. Considering this bearish outlook, a short-term short position strategy seems more suitable. An entry price of 57 cents would allow you to capitalize on the anticipated decline, aligning with the current price and the forecast. To manage risk, a stop loss at 59 cents would be prudent, protecting against potential upward price reversals. The target price should be set at 54 cents, slightly above the forecasted lowest price, allowing for profit-taking before reaching the support level. This strategy focuses on short-term gains by capitalizing on the anticipated price decline, while the stop loss and target prices aim to minimize risk and maximize potential returns. Based on the provided information for Decentraland, a short-term investment strategy appears most suitable. The 2-week price change reveals a fluctuating trend, while the 1-week forecast indicates a downward trajectory. This suggests potential for profit by capitalizing on the anticipated price decline. The support price of $0.4556 acts as a potential floor, while the resistance price of $0.5921 highlights the upper limit of the current range. Given this context, a short position would be advisable. An entry price of $0.498, aligning with the recent price action, would be a suitable starting point. The stop loss should be set at $0.514, slightly above the recent high, to minimize potential losses. The target price could be set at $0.4556, aiming to capture the anticipated decline towards the support level. This strategy leverages the short-term bearish outlook indicated by the price history and forecast, allowing for potential profit from the anticipated price movement. Based on the provided information for ENG coin, a short-term bearish investment strategy appears to be the most prudent approach. The historical price data reveals a downward trend over the past 2 weeks, culminating in a recent dip below 20 cents. The forecast further reinforces this bearish outlook, predicting a continued decline in price over the coming week. This suggests that ENG coin is likely to experience further losses in the short term. Therefore, a short position on ENG coin is recommended. An ideal entry price would be around $0.196, aligning with the recent support level and the current price. To manage risk, a stop-loss order should be placed at $0.204, slightly above the entry price, to limit potential losses in case of an unexpected price surge. The target price should be set at $0.167, reflecting the lowest predicted price in the forecast. This strategy capitalizes on the anticipated price decline while implementing risk management measures to protect against adverse market movements. Based on the provided information for Uniswap, a short-term investment strategy appears most suitable. The historical price data suggests a slight upward trend, but the 1-week forecast indicates a potential decline. The current price is hovering near the support level of $13.137, and the resistance level is at $15.032. This suggests a limited upside potential in the short term. Therefore, a short position on Uniswap is recommended. An ideal entry price would be $13.50, slightly above the current price and the support level. The stop loss should be placed at $14 to limit potential losses if the price unexpectedly rises. The target price could be set at $12.50, anticipating a decline towards the support level. This strategy aims to capitalize on the potential downward movement predicted by the forecast while mitigating risks with a well-defined stop loss. Based on the provided chain link price history, forecast, and support/resistance levels, a short-term bullish strategy appears most suitable. The historical price data demonstrates a general upward trend, with the recent price hovering near the support level of $22.08. The forecast predicts a gradual increase in price over the next week, reaching around $22. Therefore, a long position is recommended to capitalize on this potential upward movement. An entry price of $22.05, slightly above the support level, would allow you to enter the market at a favorable price point. A stop-loss order should be placed at $21.90, below the recent lows, to protect against unexpected price drops. The target price could be set at $23.20, which aligns with the upper end of the forecast range and offers a potential profit margin of around 5%. This strategy leverages the short-term bullish momentum indicated by the price history and forecast, while incorporating risk management measures to protect against potential losses. The historical price data for Aave reveals a volatile, but generally upward trending pattern. While the recent 2-week price change shows some fluctuations, the 1-week forecast suggests a potential for continued growth. Considering the current price hovering around $305 and the support price at $305.61, a long position appears promising. Therefore, a suitable investment strategy would involve entering a long position at the entry price of $305, with a stop loss at $302 to protect against unexpected downward movements. The target price should be set at $335, aligning with the resistance level and allowing for potential profit realization as the price potentially approaches its upper bound. This strategy capitalizes on the bullish sentiment indicated by the forecast and historical price trends, aiming for a medium-term investment horizon to allow for sufficient price appreciation. Based on the provided price information for EOS, a short-term investment strategy appears to be the most prudent approach. The historical price data reveals a recent upward trend, but the forecast suggests a potential pullback in the coming week. The current price is near the resistance level of $0.8697, indicating a potential for a correction. Therefore, a short position would be advisable. An entry price of $0.850 could be considered, allowing for a buffer from the current price. The stop loss should be set at $0.875 to limit potential losses in case the price unexpectedly surges. The target price could be set at $0.780, aligning with the lower end of the forecast and capitalizing on the anticipated price decline. This strategy aims to capitalize on the short-term price fluctuations in EOS while managing risk effectively. Given the provided price information for Tron, a cautious investment strategy is recommended. The 2-week price change shows a downward trend, and the forecast suggests further declines. While the support price is at $0.2275, the resistance is at $0.2444, indicating a limited upside potential. Considering the bearish outlook and the potential for further price drops, a short position is advisable. To execute this strategy, an entry price of $0.238 could be considered, aligning with the recent price action and the forecast. The stop loss should be set at $0.244, above the current price and the resistance level, to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.225, aiming to capture a portion of the anticipated price decline. This strategy focuses on a short-term investment perspective, capitalizing on the potential for a short-term price correction in Tron. Based on the provided price information for Suncoin, a short-term bearish strategy appears to be the most suitable approach. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines. The current price is situated near the resistance level of $0.0242, suggesting a potential for a pullback. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of around $0.0228. The stop loss should be set at $0.0242 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.02106, the support level, aiming to capitalize on the anticipated price decline. This strategy aims to profit from the short-term downward momentum of Suncoin.